Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. It is Thursday, and if you're going to watch the TV set, you're going to hear new highs or four handles from highs or breaking out or finally is the range resolved. Everything that people have been kind of talking about, for the past 3-4 months as frustration is built. And I know that, in here we've talked about, sometimes it's looked like we were going to break down, and then sometimes it looks like we're going to break out. And it's been back and forth, and, the bears have been getting frustrated, the bulls have been getting frustrated, and typically when everyone's frustrated, so if you're frustrated, that's when the range resolves. And I'm not saying we're going to be blast off, to the moon, but, today's action, I came in here this morning, we were up 9-10 handles, and I was like, this is the exact same thing that happened yesterday. Yesterday, the market faded. It's almost like the computer's like wrote an algo saying, let's open up here and fade so people will think we'll do that again today. Well, we opened up 10-12 handles. We went above yesterday's high. We held above it. If you were short, you had a cover. And then as the day went on, some things worked out pretty well. For me, I came in like with 4 or 5 positions long with the hedge, which hurt, but covered it relatively well and tried to put on some positions as we went throughout the course of the day, because I do think it could continue unless it's a trap. But you can't trade the market as if it's going to trap you. You have to trade based on your rules. And if you look at the chart of the SPX, all in all, this year has definitely been, a choppy one with not a lot of traction. This is when the bears thought they had victory, and then you had that outside day that led to a nice rally. Then we pulled back, make a higher low, had another move to a very small new high. Remember that little breakout failure. Okay, then we pulled back again. And then here, we held higher. During this entire run, we were basically toying with this ascending channel, where every time we got here, we thought we were going to break down. Every time we got here, Garmin would say we'd be down 8% in the next month. Or here, he said 8 to 10%. But we held. So anyway, I'm only kidding around with that. I don't even know who Dennis is. I'm kidding. And now this is where we're at. So the question is this a breakout failure? All I know is I wouldn't be short against it. A lot of people are like, oh, I've shorted here, I made money. I shorted here, I made money. Each time the range is getting a little bit more constricted as we come closer to highs. So I don't think you need to be short here, because we're going to wind up, if we break out, you're going to have to cover a lot higher. And the same way people like Redler, why don't you have a hedge on? You have all these longs, because, this is the first spot here. And I think if we break out, we're going to go to 2140 or 2160, and I should be, directional here. This has been your choppy mess with longs and hedges. Now if we go, it's directional. If we don't go and we fail, it is what it is. But we're above the 8-21 day. We're right above this high, and it looks as if, it can continue. You look at the IWM I talked about this morning, saying I know that, it's not leading, but at this point, if it just tries to play a little catch-up, it could help. This is when you had that outside day, it broke down. Then I talked this morning about support, higher level support, and that if we were to break here, this mid-level spot, it could maybe not go right to new highs, but at least, be a little bit of a tailwind for the market. The IBBs did the same thing. Obviously, it's what put us in the range when they sold the news, and then this extended channel broke here, and then, it held support there, and now you have a mid-level box pattern that it seems like it's, opening and getting through. And that could bring it back to perhaps somewhere over here, or even, a lower high that'll help. But this, so all 2 or 3 of those sectors look as if it's going to help. Mid-caps also. Mid-caps actually acted better than both the bios and the what's it called, and the Russell as it cleared this level here. So if you were short versus, you had a cover, and now it's, probably going to be the next sector that we, watch pretty closely to get back to highs. The banks have been strong. XLF, look at that. I know it's been choppy, but when the banks are strong, the market stays strong, and this broke above this, stayed above it, closed high. The actual the KRE is probably at new highs, breaking out. Even more the regionals. So lots of stuff lining up, and on top of that, high beta tech started acting better, which is good news for us because that's what we trade. That's what moves. Earlier in the week, I outlined Amazon and Netflix and Tesla, and they all still look good. Just to go through them real quickly, Netflix, gave us that trade that we listed in the note right here. Now it consolidated and looks like it can continue. Looks good. Amazon, very similar. It's been a little choppy, but still absorbing above this pro gap. little false breakout here, but then held the 8th day and looks like it can go again. So, everything I'm going to go over now are like positions you probably could be massaging and owning as swing trades. Netflix being one of them, Amazon being one of them. And then I know Tesla, we made a little bit of money on the cute side. Short, it's only because it was so extended. Now, I think at some point, it lets the 8-day catch up and it continues. But obviously the buy price was, was all the way down here when it broke the descending channel. Same thing. When trends change, we get excited, right? You have a high, lower high, and then boom, for the first time, broke the trend, went on the right side, and then gave you, some nice action. So, we talk about day ones. Can day one lead to day two, day three? And yesterday, I got long Facebook. It's been a broken name, and I tweeted at 3:52 to Redler All Access. If you're not on Redler All Access, what that is, it's a private Twitter feed that goes along with my note every day. Go to the front page of T3 Live, and you'll see you could actually even probably get a trial besides my regular Twitter. And I put a lot out there on regular Twitter, too, that I'm going long Facebook. It finally closed strong, and I think it can get to 80 to 80-40. I did not think that Facebook was going to do that. Okay, but I didn't have to. Unfortunately, I take my trades a little early, and I did that with Facebook too. But here was your first day of closing the highs. Didn't do that during this entire time. Didn't do that during this entire decline. And if you sold Facebook when you had that outside day after earnings, this was your spot to take a look. And then it cleared this, and then it had power. And right now it's back to some bigger resistance, so it probably needs a little bit of time. But all in all, if you had your day one long, you took some after the close. You could have picked your spots to sell one here, and I think, I was done with it right around, I thought this would be the resistance a little bit closer to there. So I missed out on that, but, at this point, it was a good calculated trade, but it's good to have Facebook back. I don't know if it's going to all of a sudden branch out and go to new highs relatively soon, but this will wake it up and loosen it up a little bit. I posted the chart of Apple. Apple also, it's good to have Apple potentially back. I think it's back. We'll see what happens. Apple, after earnings did your false breakout, so you had to be a little careful and not just sit in it. And then it developed a pretty big upper base, okay, which I wasn't sure what it would do. And then this morning I put on Twitter again a chart. I said, I am long Apple. It's not acting great for it to wake up. It's got to clear this first. It's got to clear this 127.62. So that was, if you were in tier 1, you're tier 2. Then once you're in tier 2, you figured out where you wanted to sell to get back to tier 1 to maybe get a little bit more comfortable or just sit in it, because this was your first clean day one. It'll be unfortunate if it fails tomorrow or opens lower and doesn't give you a way out, but according to the rules, this breaks a level. It's Apple. Chances are your next point of reference is 130.50. Maybe they want a strike at 130, and then it's back to highs. So all in all, this upper base, pretty much just digested, multiple moves. This one up. Now this one acted a little bit different, so we'll see if it has follow through. And that's where we need some follow through. I'm still in this one. Google, someone wanted me to go over it. It's just still broken. It's not the high end of the range, but I guess you could say it held support. And if the market's going to break out, people will be like, oh, I got to buy something I know. Maybe they'll buy a little Google, but a lot of resistance right there at 553. Baba's been interesting. Okay, to me, it changed on that gap up after earnings. It hasn't been a blockbuster trade. It hasn't been a barn burner, but it broke this descending channel. And now what's it doing? Going sideways. I've been long it pretty much all week. Today, if you added to it a few times, you probably needed to go to happy hour because it could drive you to drink. It didn't have any momentum, but maybe at some point it gets going here. So this is your spot. Okay, I'm in it. I have more than I had last night. And if it were to clear this 89.29 and capture that moving average, it's going to need a lot of volume. Your next spot's here, and then who knows, maybe even fills the gap. You're hearing a lot of news around Baba of relationships and partnerships and joint ventures and all that, whereas it's still all the way down here, just repairing itself. There's a lot of people got trapped in this, a lot of bad memories, so it needs some time. But as of now, moving averages catching up, still is a pro gap there. It could go, so I'm in that one too. Let's see. People ask me about ALTR. It's that whole takeover scenario, whatever. It's still gapped up on that, and we'll see if it can break above that. It's probably going to need some news. I actually sold my options today. What's it called? Because I bought them like 2 months ago, and I couldn't get filled, so I bought the stock, so I'm long a little stock. We'll see. I do think a deal happens. It's just a matter of how and when, and it's hard to sit through, but it is what it is. I think I got my options somewhere around here, but whatever. Goldman Sachs, looking pretty good, near highs, choppy, but okay. Citigroup, I'm still in, poking its head above this range here. Still no power. Not everyone loves Citigroup or believes in it, but it's breaking this area and pretty much has a void if it wants to continue to the upside that way. Oil, which we talked about potentially putting its high in. Okay, remember that day, that Wednesday? That was right here. Okay, it created a lower high, and at this point, I'm not sure, if it's worth your time to short it, but it's on the right side of the trend line. Could start going lower. Remember this is when we said 65% chance the low is in, and that was a nice spot to switch gears, and this trend somewhat has changed. XLE is definitely lagging a little bit. XLE, just looking at it at face value, you had a nice trade here. You could have started it at the red dog reversal right there, or you could have waited after this wide range bar when it held the top half, and then boom, outside day. Did not reclaim the 200-day, got rejected there, broke, and now it's on the right side of this recent trend off the lows. Not really rallying. It was down today, so we'll see what happens here. We'll see if this holds or breaks. But money's rotating. Someone pointed this out to me. I haven't traded MU in so long. My goodness, look at that chart. That's the AGS. So there are things breaking out. You don't have to be so enamored with the transports that are just at support. So with all that said, I don't know if we're going to have a rip-roaring day tomorrow. It would be nice if we get a little follow-through, maybe Dow up 60, 70, Spiders up 60, 70 cents, stocks out at a day one, get a day two. We've had two gap ups in the futures in the last 2 days, so maybe tomorrow they're off a little bit and you get a chance to buy a few things if they go green. There's a number at 10 o'clock. I personally am not going to be here. I'm traveling to Florida tomorrow morning. 7 o'clock, my cousin, who did his first marathon with me in 2011 when I was a coach of the American Cancer Society when my mom had breast cancer. Thank goodness she's cancer-free for 5 years. Thank you. Did his first marathon with me, and he's doing a 100-mile run. Race, actually. It's called the 100-miler in the Keys. So he's allowed to have someone run with him in 10-mile increments. So he's like, Red Dog, you got me involved in this. You have to pace me. So I'm going, and I'm going to run mile 40 to 50 with him, which are 10 miles, and then 80 to 90, another 10, so 20 total. And his goal is 17 hours of running in the Florida Keys. I don't know. We'll see what happens. Hopefully he finishes. He's doing it for our grandfather. So got to go. I'm not going to be here Friday. I'm not going to be here Monday. I will be tweeting from afar. If you look at the virtual trade floor, you see I have 7-8 long, so I'm going to try and be an investor just like you, swing trading good positions that I'm going to try and hold and maybe add to with bracket orders and put stops in if the trade changes to show you can do it. You don't have to be in front of your computer all day long to be a trader. You could be there multiple times throughout the course of the day or even have a different job and find swing spots to add cash flow to your current job, which also is a different way to approach it. So it's all about your time frame. Which way do you want to approach it? Active, which means day trading every day. Swing on, day trading and carry positions. Intermediate trends, be long when we're above the 8 and 21 day, and then macro. If you've been putting money in a fund every single month and you're 70, you did great. If you're 30, you've been doing really well, and even in the past few years, you're on your way. So you have a long-term, mid-term, short-term account. You put together a plan. If you do all three, you definitely, are probably spending a lot of time and planning and a lot of education, but you're probably putting yourself in a position that's pretty nice versus frustrating and complaining and pointing fingers and upset about QE and upset about this and upset about that. And every time new highs comes in the front newspaper, you throw it out the window because, whatever. You don't know how to get in. Well, if you're watching this, you're figuring out a way to approach it, and congratulations. So with all that said, I hope you're having a great week, and let's see what happens tomorrow. Maybe we have an inside day, and then we continue next Monday, but what would be pretty frustrating is if we give back, half it today, and, it's one of those breakout failures, and, it is what it is. But at this point, it feels as if this time could be different, and we could extend, and we could trend for a little while. Have a great night. I'll be in touch from afar, and I'll see you on the video Tuesday morning. Have a good night.